Hello, welcome to the European Open briefing for Wednesday, January the 25th. I'm Rafi Boyadjian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So we're seeing the dollar making a rebound since yesterday. Early yesterday it did, of course, touch an 8-week low against the yen. The uptrend comes after reports that Donald Trump is now shifting his attention to more pro-growth policies, and that's giving US Treasury yields a bit of a boost. The Canadian dollar is also up sharply as one of those Donald Trump's actions yesterday was to approve a pipeline project that's going to transfer oil from Canada to the United States, and we're seeing gold slip back today on the broader risk sentiment in the markets today. Another major mover is the Australian dollar this morning, with the Aussies down sharply after Australian inflation data came on the negative side, on the disappointing side. So let's start with the dollar-yen pair. We can see that rebound since early yesterday. Earlier yesterday did of course touch a multi-week low below the 113 yen level. It's currently trading around 113.50 yen. We of course had some news out of the White House that Donald Trump has given the go-ahead to two key pipeline projects, one of which involves Canada. There's also been other measures taken by Donald Trump, mainly to ease regulation on the manufacturing sector in the US and just to speed up the approval of high priority infrastructure projects. So all of that has put the focus on more growth-oriented policies, which is giving a boost to US Treasury yields and in turn to the US dollar. If you look at the Canadian dollar, this is the USD CAD chart. Yesterday there was the big dip, so that boost for the loonie came after announcement of that Donald Trump has approved the Keystone XL pipeline project, which was shelved by President Obama on environmental concerns, but Donald Trump is less concerned about environmental impact, and he's given that project a go-ahead, and that's likely it's going to boost oil exports out of Canada to the United States. And we saw the loonie hit a one-week high of 1.3105 to the US dollar. And that comes despite the fact that oil prices have been mostly flat over the past few weeks. So there's been less impact on oil prices to the loonie. So therefore, this project has given the Canadian dollar a much-needed boost. If we move on to gold prices, we can see that as the dollar has been rebounding, the oil prices have been coming down. It's currently trading just above the $1,200 level. And the fact that initially prior to at the start of the week we saw a lot of focus on protectionist moves, where Donald Trump withdrew the US from the TPP negotiations, and now the fact that he's focusing on sort of more pro-growth policies, that's also having a wider impact on financial markets in terms of improving the risk sentiment, and that's why we're seeing gold coming under pressure today. Let's have a quick look at a couple of emerging market currencies now, because both the Mexican peso and the Turkish lira, both of them have been underperforming recently, and they've yet again been underperforming over the past day or so. The Mexican peso, although it did rise at the start of the week, is down now because Donald Trump appears to not be giving up on his idea of building a wall. He's expected to announce measures today to start the process of building that much publicized wall between the borders of the US and Mexico. The Turkish lira, on the other hand, is under pressure because there were wide expectations yesterday that the Turkish Central Bank would raise its key rate, but it left investors disappointed by keeping its main benchmark rate unchanged at 8%, and that's left the analysts to wonder how the Turkish Central Bank will go about defending the lira, which of course, as we know, is not doing too well lately because of the political uncertainty, terrorist attacks, and economic weakness in Turkey. And the lira is currently trading at 3.80 per US dollar. Finally, let's have a look at the Australian dollar. We can see it came down sharply early this morning because of weaker than expected inflation data out of Australia. Australian CPI was up 1.5% year on year in the fourth quarter of 2016. Although that is up from 1.3% in the prior quarter, it is below expectations of 1.6%. The RBA's two measures of core inflation were also, one was weaker than expected, one was slightly above expectations. Overall, the two were fairly steady, so that keeps the door open for further rate cuts in the coming months in Australia, and that's why we're seeing the Aussie coming under pressure. It's down nearly 1%, and it's currently at 0.7530. And before we go, let's look at what happened with the Supreme Court's decision in the UK yesterday. The Supreme Court did rule that the government does not have the authority to trigger Article 50 without MPs' approval. That was the government was expecting that decision, so they've already started drafting a bill to put forward to Parliament, which would lead to getting the required approval to trigger Article 50. But this has been positive for the markets because MPs will likely make amendments to the government's bill, and this will also lead to a wider debate in Parliament, and basically put the government under scrutiny, so that therefore the government will not be able to do whatever it wants. They'll be able to, and that is seen as potentially lessening the possibility of having a harder Brexit, as MPs will more likely press for maintaining closer ties with the EU. The pound we saw had been going up ahead of the decision. We had a bit of a sell-off afterwards. It dropped below. It dropped to around $1.2420. It's currently back above the $1.25 level this morning following that decision. Let's have a look at today's economic calendar. We did have some positive trade data out of Japan. Japanese exports came in much stronger than expected in December. They were up 5.4% year on year versus expectations of just 1.2%, and that's the first rise in exports in Japan in 15 months. So that bodes well for fourth quarter GDP data, and also it lessens the possibility of further easing by the Bank of Japan. And then we can also see that Australian inflation data there as well. Coming up later in the day, we've got the IFO business survey out of Germany, but it's going to be a fairly quiet day in the US, and apart from the German data, there's no other European data either, apart from the CBI trends data in the UK. That's it from me. Thank you very much for watching, and have a great day.